All right, welcome into Market Day Report. I am Scott Shelly, otherwise known as the Cow Guy. Thank you very much for joining us here today on a Friday. Got a little pep in our step. Friday is always a fun day right before the weekend. How about corn? See if we've got anything going on in that corn market that's going to be any fun. Well, it's not really. You know what? There's not a lot going on here. Let's not make anything out of nothing. March is down 0.75 cents. 676.5 is last. We've got about a 5.5 cent range in March. May's down 0.25 cent, one tick. 674.5 is last there, but we do see, July and Sep have a little bit of a gain. And finally, go out to the Dees, the new crop, sharply unchanged. Love saying that. Let's see soybeans in Chicago, what's going on there. 8 cents lower in the March, that's the front month. 15.06 is last. May's at 15.02 and that's down 8 cents. And as we go out, the deferreds, they lose a little bit more. Let's see what we've got going on in Nov 23, the new crop. Novi 23 beans are down by 10.5 cents. There you go. That's going to give you an idea, but that's just around 0.75% lower on the day. How about wheat in Chicago, you ask? Well, Chicago wheat market, what do we got going on here? It's about where it was the last time we checked, up about 6 cents. 5.75 cents higher in March. 7.40 was last there. May, 5.75 cents higher to 7.48.5. Hard red wheat in Kansas City up 11.5 cents in the front. That's 8.43.5. as a price. May is at 8.37 up 9.75 cents. Spring wheat, well, 7 cents higher in that March contract to 9.11, which just is another car that I cannot fit into. May is up 6.75 cents to 9.04 as the rest of the deferreds go a little bit lower, and only about 2.5 cent gain as you go out the deferreds. Finally, cotton, what's going on there? 278-point rally in that March contract, 86.17. We're about 53 cents from the highs there, so not bad. 278 points. All right, let's get to our next guest analyst. That's going to be Todd Horowitz. He's with Bubba Trading, and currently he's in Las Vegas. Thanks for being on. Looks like you changed your table or your desk around there, Todd.
Well, I'm trying to stay up with the times. I want to be like, there's no trading to do, so I have to find things to do with my hands during the day. Scott, we're in these ranges that are just, tightening and getting tighter and tighter, which really suggests that there's a much bigger move coming. So if you weigh the probability, are we going up or are we going down? Well, we can't afford to go down because we won't be able to afford to farm if we go down. So the probabilities in my mind say that we go higher, but it doesn't mean that we're going to break out of this ridiculous trading range we've been in for months.
Well, we had a bullish report last week. But, we haven't really seen the cavalry come in to support it, right? And so now you're going to get some producers and the likes kind of peppering the market with offers. Maybe, if anything, we haven't had really any fundamental news except for maybe rains here and there down in South America. That's peppered the market a little bit too. But we haven't really had any reason for the bulls to come in with a vengeance and buy it with both hands. So if that's the case, we just kind of seem to be drifting lower to sideways.
Well, I think we drift higher and lower, but I think that what you're going to really see, Scott, I think a lot has to do to tie into equities. And, equities, although have been extremely light volume as well, and in a very similar pattern, I think the equities, when you look at the overall economy, really have to break lower. And again, that new money, I think, will be the push that will take the grain markets much higher when we finally see the markets realize that these earnings are no good, and that when you look at something and you make it look worse than it is, and then you report better, suddenly we get excited. But that's not really anything to get excited about because the fundamentals are breaking down.
Yeah, we're going to have some sort of reckoning because there's a lot of data that kind of is at cross purposes right now. You're right. And who knows when that happens, if it happens. I mean, I think there's a big jobs reckoning that needs to come too. That's something that we talk about almost every single day. And so having said all that, we haven't solved any of those problems that we had in 2022. We've drugged those over the line into 2023. So at any moment, who knows, the next headline could shoot us higher. That could be the case because seems like that was what we did all last year. But anyway, we're going to go away. We're going to stay right there. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz, Bubba Trading, Las Vegas, after this. All right, welcome into Market Day Report. I'm Scott Shelby, and I am the Cow Guy. And let's take a look at cattle, right? That's a natural segue. I like the word segue, and I like the cattle, so let's see what's going on in Chicago live cattle. And the answer is not a lot. 156.42 is last in Feb. Folks, that's up 47 cents, and we have not even had a dollar range over there. April's up 55 cents. On the floor, we used to call that double nickels. 159.67 is the price, and that too is not even had a dollar range. So not a lot happening there, but we'll take it. It's steady a little bit better in the live cattle in Chicago. How about feeder cattle? What do we have happening there? Well, March is up 90 cents. 181 even is last, 42 cents from the highs. April's up 70 cents to 185.85. There you go. So a little bit better there in feeder cattle too. How about lean hogs? They've been lower the last few days, but here today we're tacking on some gains. February's up $1.40 to 78.05, while April's at 85.80, and that too is up $1.40. Let's bring back in Todd Horowitz. He's been waiting quietly in the wings. He's with Bubba Trading in Las Vegas. Todd, anything you got to say about the proteins?
I think they're just range bound. I mean, I'm a little concerned about feeder cattle now they've broken below that 180 level there. But overall, I think we're in pretty good shape. I don't see a dramatic rally, but I think there's enough stability to keep them running higher. I mean, we're short supply. There's going to be some movement here. The cattle's going to slaughter faster because they can't afford to feed them. So I think we're going to remain pretty steady here. Again, I don't think there's a ton of room to go to the upside, but I certainly don't believe there's much to go to the downside here. And I think hogs are probably at a near-term bottom as we turn the calendar. So I'd be looking to be a buyer of hogs somewhere around here.
All right, we got 20 seconds left. What do you think about that CPI rate of 6.5 and the PPI rate of 6.2?
I can't say that I'd get beeped if I said what I really thought on TV, but I think it's garbage. I mean, listen, inflation is if inflation is 6.5%, then I'm a monkey's uncle, so to speak. I mean, we're 20% plus without even thinking about it. All you have to do is look in your own bank book and your own spending habits, and you tell me if you're at 6.5% or closer to 20.
Boy, oh boy, that's a good answer. All right, really appreciate that, Todd. Todd Horowitz, he's with Bubba Trading, and he's in Las Vegas. We're in Nash Vegas, where I can throw this one back over to Suzanne.